the audio. There we go. All right, guys, we're back. Yay! All right, I'm Larry Steinhouse, and welcome to Money Chat Now. Oh boy. All right, so if you guys didn't know what's going on, WWDB dropped the ball again. And because they dropped the ball, we had some technical difficulties. So we will no longer be on WWDB. I'm telling you right now that Sam Spicer will not have my business anymore, and we will not be on WWDB. So this show will be on the show anyway. So let me see if I can get back to wherever we are here because I'm so confused now. But today is Tuesday, July 26th. I want to welcome you to the show, and WWDB will never be on my list again of shows that we'll be doing. But you can be able to reach us on Facebook, Twitter, LinkedIn, and YouTube. And of course, if you'd like to connect, you can go to contactlarry.com, and you can find my social media connections on my email and my text message information at contactlarry.com. All right, just a reminder, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can also find Money Chat Now and the Larry Steinhouse Show on Spotify, so please go there and subscribe as well. You can comment live during the show on YouTube, Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. And of course, by the way, if you're commenting from a group but it's not the Money Chat Now fan page, your name will not show up on my dashboard. Please go to the Money Chat Now page and comment there so I can recognize you. Hey, by the way, I have a question for you. Do you know anybody who might enjoy this show? Maybe the comedic common sense or maybe the good market advice? Please share the show with them by clicking the share button and sharing it directly on their page. Share it in groups, as that will help your friends make more money and laugh through the morning. Hey, Money Chat Now, of course, is brought to you by Investor Schooling. And you can attend a complimentary class this Thursday by going to Investor Schooling, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, of course, we're going to be discussing the recap. We're going to be talking about top cities that people want to live or actually want to leave. We're going to be talking about Biden, the gas man, or the gas peson. And we're going to be talking about no coffee for criminals. All right, so once again, for you guys who are just tuning in, just so you guys know, that we're no longer on WWDB because once again their guy decided not to show up, and at this point we will never be on WWDB again because I won't give them the time of day anymore. So if you guys have been listening on WWDB, you won't find us there anymore. In fact, we may even have some other issues, and I'll keep you informed of that as well. All right, yesterday looked like it was kind of, Wall Street was kind of scared, right? Nothing really moved. The Dow and the S&P ticked up and then ticked down, but nothing stuck either way. The Dow finally finished up at the end of the day about 91 points and just under the magic number of 32,000. The end of the day was a little hopeful, but nothing exciting really came of it. This week's earnings and reports are making Wall Street very nervous. Today's a huge day for earnings. Starting in about 20 minutes, we're going to hear from so many companies. A couple of them even reported already. We're going to hear from Microsoft, Alphabet, Coca-Cola, McDonald's, General Motors, 3M, UPS, Pulte Group, Raytheon Technologies, Texas Instruments, Arthur Daniels, Chubb, Chipotle, Mondelez, Canadian National Railroad, Pentar, Packard, Kimberly-Clark, Albertsons, General Electric, Ameriprise, Teradyne, Ashland, Boston Properties, First Energy, Visa, and we're going to have not only these earnings, but we're also going to have the following reports: the Case-Shiller Home Price Report and the FHFA Home Price Report and the new home sales report. And let's not forget the Consumer Price Index report at 10 a.m. Holy moly, it's going to be an insane day. In fact, I'm going to tell you that the whole week is crazy with many more earnings and earnings reports this weekend. No wonder Wall Street was scared yesterday. To me, this week is like the Super Bowl to sports fans. I like to watch the earnings reports roll in and make my predictions on who's going to be doing well and who's going to tank. Meta is Thursday, and I don't have any high hopes for the stock. In fact, the estimate range for the earnings seems to be a bit high to me. They finished last quarter with $3.61 a share, and this quarter the estimate is about $3.35 a share. I believe they couldn't make it anywhere near as close as they did last quarter. It's going to be really bad. I don't think Meta is going to hit their earnings at all. The only hope for the stock to go up would be good guidance, and again, I don't even see that either. Apple also has earnings the same day, and both of them are after the bell, and always fun to watch. I like putting on the CNBC at 4 o'clock and watching them come out because you just watch the stock market go crazy. This week we'll also have the Fed report and the jobs report. Brace yourself, it's going to be crazy as a cat with catnip chasing a mouse. And also as crazy as Sam Spicer is going to be chasing that engineer this morning after I just fired them. All right, reports were showing hedge funds were dumping stocks right and left, and just to be sure they didn't get caught up in the frenzy, an announcement from Wall Street last night made it even worse. They stated that they're going to cut their quarterly and full-year profit estimates because of rising food inflation. This alarmed investors who deliberated the implications for other retail stocks. Walmart is concerned that higher prices are causing consumers to pull back on general merchandise spending, particularly in apparel. So basically, they're going to say that they're not selling my jackets anymore. Walmart plunged nearly 9% in extended trading and dragged other retailers with it, like Target. They dropped 5%. Amazon dropped 4%. Macy's and Dollar General each declined 3%, while Costco shed 2%. So now the retailers are starting to feel a pinch, and as supply starts to return, the demand will also start to dwindle. This will cause the opposite of inflation very shortly. It will cause deflation and a recession. It's all around the corner. So let's buckle up and let's take a quick look at the futures and see what's going on right now. We have the Dow is down 119, we have the S&P is down 10, and we have the NASDAQ is down 30. Oh boy, oh boy. All right, let's talk about some top cities that people want to leave. Here's an interesting report that I found online. No, not a surprising report, but an interesting report. This is the Redfin report that states that these are the cities in America that most people are fleeing from. The report ranked the cities most likely to try to leave as most likely for people trying to leave are San Francisco, Los Angeles, and New York. These cities top the list. These are the cities that people want to leave. They don't want to live there anymore. The next four are Washington, D.C., Seattle, Boston, and Detroit. Redfin tries to explain why these people are fleeing these cities in the article, and they conclude it's because housing prices and mortgages rates are too high to afford these cities where the homes are normally over $1 million. Right, like Detroit. I have to disagree with the article. Clearly, people who own homes in these cities have already been paying these mortgages and have these houses already. They aren't concerned with the prices of the homes because they already live there. I think a better explanation of why they live in these cities or why they're leaving these cities is explained further in the article when we find out what cities are growing. The following cities are growing: Miami, Tampa, all those are in Florida, Phoenix, Sacramento, California surprises me, Las Vegas, Cape Coral, Florida, San Diego, Northport, Florida, San Antonio, and Dallas. Many of the places people are fleeing to or going to is Florida. It appears that Governor DeSantis is like a beacon of shining light to the people who want to have more freedom and pay less taxes. Yes, we do have some Democrat cities on the list. However, the radicals like Pelosi and Newsom are what they're running from. The high taxes and government controls, and of course the way people were treated with forced masks and vaccines over the past 2 years are also a factor. No, it isn't about home prices. What it is about is tyrannical governments who try to control the people and then change them or charge them higher taxes to do so. Being in Pennsylvania, I'm looking forward to Doug Mastriano and Dr. Oz helping this state change to no more tyranny. Maybe I could stay in this state a few more years if this happens. By the way, Redfin's data is from the places, it's basically from when people search for homes on the Redfin website. You know, when they go to Redfin's website, they actually figure out how you're living by where you're living by your IP address, and then record and track where you're considering leaving or living. Let's have some fun tonight. Hey, listen, everybody go to Redfin website tonight. Look for homes in Area 54, or maybe the moon, or maybe even Ukraine. We need a lot of people to do this to affect the data, so let's get the data all confused. All right, let's talk about mobile home parks and rent. Hey, here's something that kind of dovetails right onto the last article. I'm sure you're all familiar with mobile home parks. Well, look, mobile home parks became the hottest investment in the past 3 to 5 years. Someone realized that mobile home parks were cheap to buy, and at least they used to be, easy to maintain, and they had tremendous cash-on-cash return. Mobile home parks became such a good investment that hedge funds started to buy them. Well, as investors started to realize that there's a housing shortage, the owners of these funds, both small owners and large hedge fund owners decided to raise rents, much to the chagrin of the residents of the parks. Some of these parks are raising rents as much as 100%, and many of the tenants are starting to revolt. The problem is they have nowhere to go. Many are elderly or live on fixed incomes. Look, I'm certain of the mindset as an investor. I want to take advantage of capitalism. However, you also have to feel for the people. As for the mobile home parks being an investment, I like the idea, but the market has to cool down a bit for me first. As for rents, they will go up and then peak. They will also come down a bit as the recession starts to kick in. I also wouldn't be surprised if mobile home parks start to be cleaned up and have looks that are less shabby. By the way, I think the stigma may even change as well. All right, let's take a break here, and when we get back, we will talk about some more stuff. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Steinhouse, and welcome back to Money Chat Now. Hey, if you'd like more information on my book, just go to where fine books are sold. Go to Amazon, Barnes & Noble. You can get that book right now by ordering it right away. Hey, by the way, if you're watching online, please hit that share button so you can help your friends learn how to make more money. And of course, if you were trying to listen on WWDB, well, you know, they're still sleeping, so we didn't get it. We got a repeat out there because that's automatically programmed. And by the way, if you listen on WWDB, expect this show to no longer be there because I'm going to make sure that it never will be there again. Anyway, if you're watching on YouTube or LinkedIn or Twitter, please leave some messages or please leave, some comments, and I'd love to respond to them. We have a whole bunch of people saying hi that I haven't had a chance to say hi to because I was so busy trying to figure out what to do with this craziness. We have James, and we have Glenn, and it looks like John and Tom and Mike and another Tom and Rob and Charles and Dave and Mark, and wow, so many people. Thank you so much, and Bill and Peter, and of course my lovely wife Linda. Thank you so much for watching. I appreciate you guys. All right, so far we talked about the recap. We talked about the fact this will be a crazy day. We talked about the fact that there are many cities that people want to leave, and we talked about mobile home rents. Coming up, we have Biden the gas man, and we have no coffee for criminals. Oh, it looks like my brother Seth has joined us as well. Hey, Seth. All right, and then after that, of course, we have today's picks and plays. But you guys hit the like button. Listen, we just lost the 7 people who listen on WWDB, so please hit the share button so we can get those 7 people back. Don't forget to leave comments on Facebook, LinkedIn, YouTube, or Twitter. And that's pretty much it. Also, look up Money Chat Now. Make sure you subscribe to the YouTube channel and let me know what you think of the show. All right, of course, before we start the second half, I told you, don't forget to order my book. The book is now released, and you can get this book wherever you can find fine books. Order it online today, and you'll have it in a day or two. And I promise you're going to learn something before you even finish the first chapter. All right, let's get into the second half. Let's talk about Biden and gas prices. Wow. Have you seen gas prices lately? They've come down about 65 cents in the past 4 weeks from their highs of just over $5 a gallon. Guess who's taking credit for it? That's right, the gas man himself, Joe Biden. Yep, he is proudly taking credit for the gas prices lowering the 65 cents from the peak of about $5. What? I'm so confused here. Has he forgotten that gas prices are still at record highs? You know, the record highs for any president? $4.35 is still higher than it ever was before. Before Biden took office, gas prices were about $2. $2! Now this idiot says he's doing a great job because gas prices have fallen from $5 a gallon to $4.35 a gallon. Well, as you would expect, he's being roasted by many besides me for this ridiculous claim. Biden tweeted a meme stated that gas prices now cost $35 less for a family with one car and $70 less for a family with two cars per month charge. However, here's an interesting thing. The tweet actually says, for American families looking for a little more breathing room, these savings matter. Breathing room? Savings? Hello, McBiden. Have you been paying attention to inflation? You know, the inflation you caused? But wait, it gets even better. The meme in the tweet coming from Joe Biden or his idiot staff had a serious spelling error in it. Instead of the tweet saying $35 less per month for one person, the meme had the word person misspelled, and it was spelled P-E-S-O-N. Yes, Peson. I really think they meant to spell peon, not Pison, but you can only imagine how Twitter blew up over this one. One reply pointed out that Pison means nipple in Spanish. And that wasn't the best one either. The best one I saw was the person who reminded Biden that he and the news media recently said that the president does not control gas prices. Go look up some of these. They're hysterical. And you may have heard also that the Democrats do not want Biden to run a second term. They feel he will hurt the party. Hurt the party? You guys appointed him. He was the best of the party. Bring it on. Let him run. Especially if Trump runs against him. Hey, by the way, I'm curious. Would you guys vote in the primary for DeSantis, or would you vote for Trump? Let me know in the comments, Trump or DeSantis. By the way, just a thought for the election. I was wondering if it'll be one vote for Pison this time. All right, let's get into retail violence and crime. Another thing we can thank the great Democrat leaders for is the high crime rates in our cities. With poor leadership and soft on crime policies, the crime rate is increasing exponentially. But then, why wouldn't it? Do you remember the theme song that said, if you can't do the time, don't do the crime? Well, now it's, go ahead, do the crime, you ain't going to be serving time. Well, with that attitude, companies are starting to realize that their employees and customers aren't safe anymore. We heard about Starbucks and other companies closing their stores due to high crime, and now some of those same companies are hiring security as well. Even the woke are waking up. During an international forum or internal forum at Starbucks headquarters Wednesday, Howard Schultz, CEO, said the stores were profitable, but the company was closing them because of employees' safety concerns. He continued, we are facing things that stores weren't built for. We are listening to our people and closing stores. He said local governments must do more to fight crime and mental illness as the need to address safety has grown. Let me repeat that. He, the woke liberal, said governments must do more to fight crime. How about arresting people for crimes? Let's make stealing illegal again. According to the Wall Street Journal, violent crime has been on the rise in the U.S. since the onset of the pandemic, with cities including Seattle, Los Angeles, Chicago, and New York reporting a surge in shootings and killings. No wonder the people are fleeing these cities. Murder rates have also soared in rural areas as well. Local officials and law enforcement point to pandemic-related stress, a proliferation of guns, and increased alcohol sales, among other factors. Really? How about the real factor and the biggest factor is prosecutors like Larry Krasner in Philadelphia, who fires cops for shooting and killing a person who was committing a violent crime with a gun shooting at someone else. That's right. Even the cops can't do their job because the fear they will have, because they'll lose their job that they were sworn to do, because they're basically just doing their job that they were sworn to do, and they're going to lose their job because they're doing the job they were sworn to do. Well, now we have crime rising and stores closing in high crime areas. So not only can a criminal get some quick cash from robbing a Starbucks, but they can't even get a double macchiato with caramel and whipped cream as a reward for their great work. How traumatic and insulting. All right, let's take a break here, and when we come back, we'll be talking about today's picks and plays.
Okay, so you thought about buying and selling real estate. You thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock option sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, I want to remind you, of course, that this show is open to sponsorship. I saw like hundreds of books talking about my books on this show. And if you want to be a sponsor on this show, because there are people who listen to it every day, we have raving fans. If you want to advertise your product on this show, please reach out, let me know, and you can reach me for this or just about anything you'd like to discuss at www.contactlarry.com. That's www.contactlarry.com. And by the way, did you know that we also have the interviews from Interview Tuesday? Now, today is Interview Tuesday, but we do not have an interview. We had a little bit of technical difficulty today, so we do not have an Interview Tuesday today. But all of the interviews are on Money Chat Now, and you can also find Money Chat Now stories on Spotify and also the full show on Spotify. So just search Money Chat Now and Larry Steinhouse, and please subscribe also to the Spotify channel. All right, so far we've been talking about the recap. Right now, the futures are still down 112. The S&P is down 9, and the NASDAQ is down 20. We talked about top cities people are leaving, and they're all Democrat cities, charging too much taxes and having too much crime. We talked about Biden, the Peson, and we talked about no coffee for criminals. Of course, coming up, we have today's picks and plays. But did you guys hit that like button yet? Did you guys hit that share button? Tell all your friends about the show. Let them know it's both entertaining and educational. Please share it on your page or in groups that you feel will also enjoy the show. Have them like the Money Chat Now fan page so they can get notified of the show every morning. You can also leave comments on Facebook, Twitter, LinkedIn, and YouTube, and also tag some of your friends in the comments section as well. And of course, if you used to listen on WWDB Radio, you'll no longer find us there as of today, because those guys are complete morons and complete, waste of time. So we won't be there any longer, but enjoy the show here because it's more fun here anyway. And those 7 listeners on WWDB will have to find something else to listen to. All right, let's get into today. Today will be a very exciting and interesting day because we had some big news that Walmart is cutting their projections for the second quarter, as I mentioned before. This put the retail stock sector into a frenzy, bringing down Amazon, Target, Macy's, and others. I'm currently looking at some of the same plays I've been making. I really like Meta in the 165 range. The problem, of course, is that the earnings are like in 2 days. If the stock doesn't pop today, it might be a good time for me to cut my losses on the call play or possibly buy a protective put. But even that may be dangerous if the stock doesn't move much. However, I'm going to tell you, I think this stock's going to move about 25 points in either direction after the earnings report. And it'll most likely go down, but I never get it right. Apple is normally a play into earnings. However, it may have risen too much in the past 2 days. I'm also looking at Yamana Gold with the symbol AUY. And if it falls below 4, I like it as a buy. Gold will definitely rebound, but more importantly, this stock bounces back from 4 quite often. I would sell it at about 5, and it's both for a good stock and stock option play. We also heard from GM this morning, and the results came in below expectations. However, they continue to have good guidance and feel sales will increase as supply chain issues diminish. I also noticed that I think McDonald's came in, and they seem to be all right. All right, let's get ready for a crazy day, and let's take a final look at the futures. We have the Dow is down 113. We have the S&P is down 10, and the NASDAQ is down 27. All right, let's take a look at crypto and see what's going on with crypto. Bitcoin is hovering around 21,000. Ethereum is hovering around 1,400. And look, both of them are falling off the highs of the month. So keep that in mind, that they're falling off the highs of the month. So it may not, it may not be the great rebound everybody thought. Gold and silver, though, wow. Gold and silver are terrible. They're certainly disappointing me with gold slightly above 1,700 and silver about 18.5 now. It's strange, but it does make sense because the dollar's moving up, so gold and silver moving down, but gold and silver will certainly move up in the future. There's no doubt about that. But it's just something that you may want to keep in mind. All right, also a couple of people, real quick, before I forget, I want to say hello to James and Rob and John and Michael and Jose. I want to appreciate you guys watching. Treasury bonds have also dropped to 2.76%. So that might be good. Who knows? Oil is still about $98 a barrel, and the average gas price is moving down again to $4.35 because Joe Biden did that. Joe Biden got the gas prices to $4.35. He is such a great guy. Let's go, Brandon. Wow. Hey, I want to thank you all for listening and watching. You guys are awesome for listening and watching. And, listen, we're not going to be on WWDB anymore, but you guys will definitely be on all the social media stations, and we'll have a blast and we'll have a little bit of fun. All right, my name again is Larry Steinhouse. I am the host of Money Chat Now. I am the CEO of Investor Schooling. And don't forget, you guys can contact me at contactlarry.com. That's contactlarry.com. And you can contact me there. You can make appointments with me there. You can even speak to me. You can send me a text message from there. And I also want to remind you that from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show is solely mine, and no one asked me to discuss them. And for all you guys who are paying attention, make it a profitable day.